Hey guys, how are you doing on this lovely bearish day? Today, we had a variety of really interesting developments take place coming directly from the Senate Banking Committee hearing. We saw a couple of senators, most notably Tim Scott, showing their true colors. This senator in particular was trying to make excuses to keep the SEC and the Senate from banning or amending the payment for order flow. Must be nice to the lapdog for hedge funds, and I can only wonder how much money he was paid to hold back justice from taking place. Today I am going to briefly go over what I think about the Yahoo dilemma that was brought up on Reddit. I told you guys I was going to delay it to today in order for me to do more research, and I feel pretty certain that everything that was said about it are just wishful thinking delusions. I saw a lot of concern in my comments as to what I think about AMC. The famous Reddit post that sourced the post about seller boxing extrapolated to say negative things about AMC, mostly that it was not going to squeeze. I am here to explain why this is ridiculous pestering by haters on that sub, and if you want to know my immediate thoughts, they are that AMC is going to squeeze and that their data and conclusions are mere fabrications to appease this weird obsession with putting AMC down. And most importantly, I want to talk about inflation again. Things happened yesterday that we did not discuss as that video was too long, but we ain't skipping over it today. We got tons of things to go over today, so sit back and let's get through this. Before we get started, however, let me quickly disclose and state that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. Shout out to all my Patreons and one-time donors, whose contributions continue to carry this channel forward. Thank you so much to all that have taken a moment and the burden of throwing some love my way. It means a great deal for the longevity of the channel. You guys are the absolute best. Now, let's get right into it. Let's begin with the funniest thing to ease up this video a bit. During the Senate Banking Committee hearing, Senator Kennedy from Louisiana came up with the weirdest question to SEC Chairman Gary Genlser. I am not even going to quote him, just watch for yourself.
But as to the people and the companies that you regulate as chairman of the SEC, do you consider yourself to be their daddy? No.
To me, this was the highlight of the entire hearing. It goes to show the attitude and mental capacity that the government officials have. Though asking weird questions during an interview is to be applauded if it is part of a bigger strategy to extract information or produce some time of argument, Senator Kennedy did not follow up with anything productive. His follow-up had very little to do with this question, which leads me to conclude that this question is incredibly inappropriate and very disrespectful. The rest of the hearing was boring for the most part, though it did have some good moments. Gary Genlser did talk about dark pools and brought attention to it. He said that retail orders have a 97% chance to not go through a normal lit exchange, but instead a dark market. He made a great point saying that the best market is one where all orders go through the same exchanges, where there is more competition and nothing is nefarious. I totally agree with this statement. In fact, take a quick look at it for yourself.
We're looking out for retail investors. If anybody on this committee or staff legally traded in the retail markets, there's like a 97% chance that it does not go to a transparent exchange. It goes to the dark markets or the wholesalers. And so it's harder to get best execution when you're not competing order to order. So I'm like deeply a markets person and believe in the competition of markets to bring those orders in competition.
The Senate hearing was boring for the most part, and nothing said there is enough to talk about it any further, so let's move on. Let's now talk about the controversy regarding the Yahoo Data. Reddit user Thabat made some serious conjectures when he claimed that Yahoo is censoring GameStop data depending on your IP. He presents screenshots of Yahoo Data regarding GameStop using a VPN and changing his IP address. The screenshots reflect a change in the market cap for the stock as well as the enterprise value, which takes into account the debt that a company has. I will save you the space for wrinkles from having to explain everything he said, because it is wrong. He essentially starts using carefully selected data, extrapolating on where Yahoo is sourcing the information to base the data they put out, and then quotes a company called Morningstar as being one of the sources. He says the company pushes data from individual fund companies, transfer agents and custodians, and uses this information meshed with other handpicked sources to base his claim that the real float of GameStop is 248 million. Let me put this to rest. This data and the way he cherry-picked companies and numbers are all wrong. 248 cannot be concluded to be the source using this analogy because it is mathematically and scientifically wrong, from a data standpoint. He extrapolates way too much and makes bold assumptions throughout the entire post to make baseless claims. The only thing of note here was the stuff we covered yesterday, which I believe to be partially true, as a ton of the stuff we covered was also corroborated by a previous market maker that I made a whole video on. Yes, market makers push companies out of business by shorting them out of lit markets and then playing non-stop with the shares back and forth. This is nothing new. The term seller boxing was the first time I heard it. Much research into it brought nothing about it, but the general claims in the post line up with various sources that have talked about how market makers operate, which is why I shared that. But this Yahoo claim, or the entirety of the whole Reddit post, is goofy at best and incredibly ignorant at worst. Simply put, there is no way to tell how much the float is, and no amount of data put out there, especially by Yahoo or any other broker or financial services company or website, will be correct. Hedge funds keep this a guarded secret deep to the point where I think only a select few people at the very to know it. There are far too many changing variables at a daily scale to make the float such a simply number. I think the float is constantly changing, to be honest, with naked shorts having to print back and forth, and then I imagine having to outright stop for periods of time. Reality is, your guess is as good as mine, and if you are bored enough, you can definitely come up with weird anecdotes like the one on that Reddit post. Furthermore, this post has been used to antagonize on AMC shareholders. There are only 2 people on GameStop-related subs that are incredibly smart and that I hold a personal relationship with, gathering and trading information. One is a PhD in psychology who is a data analyst for a firm, and the other one I believe is an engineer in Germany. The PhD has provided the only real and credible dataset regarding options, as he was the one who proved how hedge funds are hiding naked shorts through deep in the money options. He compiled all the information and put it into graphics. The engineer shared with me a scarily accurate graph predicting how GameStop was going to trade from March of this year to July, and the graph was 92 to 97% accurate. No, he does not share this with just anyone, and I will not share any of this information, as it will just start a frenzy of day traders to start betting on the stock, which would then completely change the outcome of the predictions. The reasons why I share this with you is because I want you guys to be extremely selective and careful as to what you listen to. There is a ton of fuzz in the community, and every week someone acts like they discovered fire. AMC is an amazing stock that will squeeze with GameStop because the evidence for its shorting is immense. You have people buying day in and out, and the stock falls. You have Adam Aaron on their last quarterly earnings putting out the best catalysts and announcements only for the stock to fall and dip. This same scenario happens with GameStop. In fact, they happen to eerily similar that I strongly believe the same algorithm trades both of them. I think AMC was once used to suppress GameStop, but once they let the price run to $70 and saw that nobody sold, Citadel and their friends realized the grave mistake they did. I think they wanted to get the GameStop crowd to sell and get in on that AMC run, but a divergence in the community happened, and we all know that the GameStop shareholders are hardcore. They will not sell even with guns pointed at their heads. As such, GameStop and AMC keep trading similar more and more every week with notable exceptions, especially during certain catalysts for each respective company or when a surge in volume arises. This causes their algorithms to let one run while they contain the other as to mitigate risk. There is a weird relationship between price movements and options data between these two companies, and I think it all originates back to the same algorithm being tasked to handle both. When one squeezes, the other will follow. I got in trouble for saying this, but I am going to be genuine with you guys, even if it means you walking out of the channel pissed off. I personally like GameStop more than AMC. I have tons of shares on both, but I do have a preference for GameStop, just like some of you have it for AMC. I think GameStop will squeeze higher based on my own calculations. That doesn't mean I will sell any of my AMC. In fact, I keep on grabbing a couple shares every so often, though my GME ratio is quite higher now. That does not take away from AMC at all. There is this weird competition between people where one stock has to fail so that the other one runs. One has to be the worst stock. The problem is that this is pure tribalism, and it plays directly into the playbook of Wall Street. We are all grown adults, and then there's me, a crayon-eating bot, and we have to be rational about this. People will buy whatever stock they like more or think will go higher, and them buying AMC or GME can only help the overall squeeze. The more one side buys of one does not in any way or fashion take away from the other. These are just points being brought by clout-chasing wannabes on the internet that peaked in high school and are trying to reborn a sense of high status. We are all nobodies without each other. There is no greater individual for a movement whose success derives directly from the group. This is a chain, and we are all links in it. Stop with this competitive race to try to one-up each other. Some of these people be looking so silly online it's cringe-worthy. Having said this, let me quickly drive the subject back to the Yahoo Data. Some people started using the same weird assumptions that the Reddit post made to come up with the float number, and then they saw that AMC did not have the prospects to run. The fault in this claim lies in that the whole equation to derive the float is completely flawed, cherry-picking a mathematical model that is not consistent with anything. The argument falls even for GameStop, so do not take any of that as objective criticism against AMC. It is just some toxic people taking any chance to say something to get clout. Also, this quickly brings me to an important point. I saw some people online crying on Twitter and even Reddit about how certain communities have pissed them off so much they will sell all their holdings on a certain stock and use the money to buy the other. I am not a financial advisor, and you should do with your money whatever you deem best. However, if you are so fragile that some angry nerds in a community saying mean stuff about your preferred stock will cause you to sell out, please get off the internet. You are in deep need of shutting of your computer and leaving the basement for a while. It is not that serious. The internet is full of trolls, and there is a ton of beauty in this. It makes for fun laughter, and if you can't take a joke or start getting too emotional as to the opinions of others you do not even know, please shut the internet off and go talk to a girl. Moving on, we need to talk about inflation, my favorite topic on this channel. Headlines were made around the globe saying inflation expectations continue to climb. News reports from the Federal Reserve Bank of New York show Americans' expectations of future inflation have hit a record high. This presents a challenge to the central bank's confidence in that inflation pressure will ease off over time. A lot of folks passed by this information not really grasping the real consequences of this. People, I need you to listen to me very closely. Inflation is currently at dangerous high levels. The expectation of increased inflation over time is even more dangerous than just the numbers. You see, if the government magically came together and fixed this issue, we could see progress by the end of the year. However, it is the expectation of higher inflation that if it is unchanged, we'll see certain that things keep getting progressively worse. Consumer spending will be affected by this, and if everyone believes that things are going to keep getting expensive, people actually start spending less money, which puts a huge strain on our economy since it's mostly based around enticing people to spend their money. The expectation of consumer spending declining over time will have a consequence for institutions and corporations around the world as well, as their business model is based on expectations derived from anticipated consumer spending. It's a whole domino effect, and this news could not come at a worse time. These are absolute mad times we live in. Let's talk about today. The Fed reported that reverse repo operations for today resulted in over $1.169 trillion, representing an increase over yesterday's operations. AMC's dark pool transactions accounted for 58% of the total volume, while GameStop dark pool transactions accounted for 39% of the total volume today. According to Fidelity Data, buy order flow for AMC was bigger than the sell order flow, with GameStop's buy order flow being almost twice as big as the sell order flow. Now, let us finish up with a recap of today's performance. AMC had a bearish day, losing over 8% today. It began trading relatively neutral during the pre-market. Once markets opened, AMC dipped and its rebound failed to break the resistance at 51.50, so the stock fell once again below the VWAP. It would make another to break the VWAP but would ultimately fail to hold support above it. AMC continued to dip throughout the rest of the day, reaching 46.96 at one point. It closed at 47.30, well below the VWAP. It is important to consider the entire market was bearish for the most part, and that is what I attribute this decline. I said yesterday that we had been rising for far too long and that a retracement was to come about anytime, and it just happened to take place today. If you have been looking for a good entry price, I hope you took opportunity today. As for what I expect tomorrow, we have support at 46.69 and at 45.36 with resistance at 48.49 and 49.24 before we reach 50. We could and should see a rebound after today's beatdown, but again, anything can happen. We are way oversold, but that doesn't always mean a rebound is going to occur. Stay bullish, take advantage of the dip and keep holding. GameStop had a bearish day, losing over 2% today. It began trading with a dip that brought it down to 195. After that, GameStop recovered and had a ton of volatility. It would trade between 198 and 200 for the most part, though it was having lower highs as time went on. It closed at 199.24, below the VWAP. As for what I expect tomorrow, GameStop has support at 198, at 195 and 191. It has resistance at 202 and 206. Though we had a bearish day, the 30-day chart is not as bearish, still showing that GameStop was able to hold support high enough to continue its higher lows momentum it has experienced for the past 3 days. I remain bullish for GameStop, though I would not doubt shorters want this stock to go down to 190 again. And that's all I have for you guys today. Today's big question is, what is the most significant historical event that has happened? I am curious to know your thoughts on this. Thank you all for sticking with me to the end. I am blessed to have such a great following by people in the community. I strongly believe I have the best people following me. You guys just seem too empathetic and happy and well-intentioned. I am at a loss of words when I think about how lucky I am to have found each and every one of you. Tomorrow I will have a morning video, so stay tuned for that. We are going to be covering some very important stuff today, so make sure to check out those videos whenever you have a chance. If you want to help this channel, I have provided links which will be in the description for donations or even a monthly pledge of whatever amount you want. These donations do go a long way in helping me be able to pump videos out. Remember to follow me on Twitter if you haven't already, and I hope to see you guys on the next one. Enjoy the rest of your day. I will see you guys tomorrow in the morning and then again in the afternoon for a video directly related to AMC and GME. Stay chill and vibing for the rest of the day and to the moon.